Video post-production, the editing and special effects that turn raw footage into a slick commercial or television show, is a highly competitive business and capital-intensive. It takes a lot of high-tech hardware to produce the sophisticated visual effects that viewers have become accustomed to. These are called tangible assets, typically listed as property, plant, and equipment on a financial statement. Tangible assets play a key role in the success of Northwest Teleproduction in Chicago, which has nearly $7 million invested in equipment.
On an annual basis, we generally invest $1 million to $1.5 million per year in equipment. With the technology being what it is, in order to stay, in the lead in the marketplace, you have to continually plow the money back into assets and upgrading your technology.
When considering purchasing or upgrading an operating asset, one of the first things Barton analyzes is the potential value or perceived value to the customer.
That's real important to us because ultimately the clients are the ones that are paying the bill. So if it's bringing them value and if they're willing to pay for that value, then we really take a good hard look at upgrading or acquiring whatever piece of equipment we're talking about.
Additionally, Barton has to look closely at projected return on investment.
Can you turn down the video on 10?
Adding to the challenge is the limited useful life of the asset. Because technological advances occur rapidly in the post-production business, key pieces of equipment can become obsolete in 3 years, and leasing options are limited. A miscalculation in the projected return on investment can hurt profits. At the opposite end of the asset spectrum is American Airlines. It too feels pressure to keep up with the latest equipment. But in the air transportation business, lead times are much greater, costs are staggering, and tangible assets, like aircraft, may have a useful life of 2 to 3 decades instead of 3 years.
Whenever we as a company decide we need to buy more aircraft, modify our aircraft, or do something with our aircraft fleet, there are a lot of things that we consider, several factors in fact.
Those factors include passenger demand, government regulations, competitors' aircraft, and technological innovations.
It's amazing the technology changes that have occurred in the aircraft industry. A lot of our older aircraft, our DC-10 fleets, for example, and our 727 fleets require 3 pilots to fly them. Well, 3 pilots are more expensive than flying an aircraft with 2 pilots. And several of the Boeing newer fleets that are long-range aircraft like the Boeing 777s are 2-pilot aircraft. So the technology has allowed us to reduce our costs.
In addition to tangible assets, such as aircraft, American also holds valuable intangible assets. Intangible assets include such things as trademarks, patents, and copyrights, and in American's case, assets such as gate leases, takeoff and landing slots, and service routes. Because lead times are often long and many variables are involved, the acquisition of both tangible and intangible assets involves risk.
Most recently, we've announced a 20 or 25-year agreement with Boeing to acquire several hundred aircraft over that period of time. We have committed to Boeing to buy those aircraft.
Of course, with such a long lead time, American's needs could change. And while there are provisions in the contract that allow American to get out of its commitments, there are penalties for doing so. While projecting American Airlines' future asset needs is challenging, leading software maker Platinum Technology has an even more daunting task. It must create its most valuable assets.
The most predominant long-term asset that we have to maintain, and probably one of the more difficult ones to maintain, are intangible assets, the most significant being capitalized software.
The challenge with capitalized software is that Platinum is betting that the software will someday produce revenue, but no one knows for certain that it will be a viable product.
I think the big risk we have and the big question we have when we're setting up that particular long-term asset is ensuring that we're not going to get into a position where the asset's not marketable.
Adding to the cost of an asset is the expense of putting it into place and getting it up and running.
Certain assets that one buys may be physically located several states away, and we have to pay freight on it to get it to our place of business. We may have to build a platform or foundation in the shop floor to hold it. There may be a number of expenditures that we have to incur in order to get this asset ready for what we intend to use it for. And the general notion of cost is, for this asset, is the invoice price plus whatever other costs we have to incur to get it in the position to use it as we intend to use it. Those costs there may be a number of additional add-on costs.
Long-term operating assets are the backbone of any business. Their acquisition costs are often substantial. Determining an asset's total acquisition cost is a key step in financial accounting because an asset's cost affects not only the balance sheet in the acquisition period, but income statements over the useful life of the asset.